Hey guys, it's Adrian, Cryptobirb here, and welcome to today's Friday webinar. This is going to be hopefully entertaining webinar for many crypto traders and investors, as Bitcoin, has been breaching through the 50K magical resistance and milestone, very important from the technical point of view. And Ethereum, has been tingling around pretty much like just $4,000. Okay, so crypto is going nuts. In my opinion, we are slowly starting to bring and accumulate and go for the full explosion for the crypto pumps coming in later stage of Q4. And everybody, stay tuned if you want to find out what, when, how, and where will pump. Yeah, hopefully everybody is feeling okay. I'm really good. I'm really excited for today's session. We are actually going to bring a couple of very important points to the entire game for everybody with regards to you can expect in the following months of pretty much like just Q4, because it's shortly coming. It's September already with us, so you can expect many different altcoins to pump because of Bitcoin pumping, because of Ethereum pumping, and there's an overall tendency that when those two big leaders pump, the altcoins tend to follow. Okay, so hi everybody, cześć Marcin, cześć wszystkim. Hi everybody. Hope again. Let me know assuming you're feeling good. Let me know where you're coming from. I just want to see, have a look very quick. Poland is actually kind of like just strange weather. It's one moment it's very warm, the other moment is actually freezing cold for some reason, which is why I'm sitting in my jacket. But yeah, praise Jesus. Beautiful comments, everybody. I think that we have managed to build a very successful mindset type of a community, pretty much because like I tend to avoid any sort of like toxicity. I tend to avoid very toxic people. I tend to reject them right away, before they actually let themselves enter or invade my space, my mind, And Macedonia, Kazakhstan, amazing. That is pretty good. Singapore, okay. South Africa, beautiful. New Zealand, Germany, Israel, okay. Poland, of course. New Hampshire, USA. Switzerland, Italy, Lisbon, Nebraska, Los Angeles. Very good, everybody. I'm really excited for you. And if you don't mind, let's get it going. And I have a couple of charts I want to quickly show you. For Bitcoin, for Ethereum, I'm going to tell you exactly why I do believe, that Ethereum is likely to achieve and breach through 15 to 20,000 US dollars all-time highs. This bull market. Okay, the bull market is not over. The bull market is still with us. Okay, and I'm going to give you very simple, very logical, and clear technical reasoning because it's actually virtually possible. Okay, and knowing of that, again, I'm going to quickly bring the topic of DeFi with NFTs, legacy overview, perhaps for the equities, S&P 500, gold, silver, BCOM, Bloomberg Commodity Index, to check the overall health of the commodity market. And then I'm going to have a couple of minutes to spare for you for the Q&A session, okay, and for the chat requests. So make sure you actually leave the comments, okay, if you're on the Twitter, if you are on YouTube, on the official The Birbness YouTube account, which has recently broken and smashed the resistance of 20,000 subscribers, which is pretty awesome because no longer than 3-4 months ago, we were barely having, just 5,000, right? And we extremely fast scaled up. We have scaled up so fast on our YouTube, and it's mainly because of your engagement. It's mainly because of the quality content that I and my team, the entire team of the Birb Nest, we have been sharing with you. Okay, so to give it a go, I just want to share the screen. Okay, and hopefully you're going to be able to tell, okay, that we have been pretty much just playing out different strange cards based on the momentum. Because what you saw after very massive rapid pump time, ever since the since the pinpointed bottom of 29.2 on 21st of July, which I tend to bring back a lot, because I did predict the life on webinar just like that a couple of weeks ago, 6-7 weeks ago. I was actually telling you like all the 7 reasons why I was extremely bullish versus the 95% of the contrary opinion crowds. Okay, so well, it's played well so far. It's edged well, and knowing that we have seen this very important, in my opinion, breakdown. Okay, this medium time frame. Medium time frame is anything technically that lasts between 3 weeks and 3 months, just by definition. We have seen this breach, this kind of like a resistance break, support break, I should say, which turned into resistance because of the trend line. Okay, the trend line is the line that shows you the trend. It helps you navigate through the trend, and it tends to act as a dynamic support or resistance level as well. Okay, so because traders, just like any other aspect of technical analysis, this is a self-fulfilling prophecy in a very major extent. Okay, because we believe certain patterns work, we tend to actually realize them, right? Because many people read that some form of an ascending triangle is bullish, they would just bid up, they would just level up their bids and expecting the breakout. And when enough people actually just set up the bids in there, set up the positions and buy the breakout, if there is any, level up, pile up their positions, there is actually a high chance to see and note the breakout. Okay, so again, knowing of that, the trend line works in a similar manner. This serves as a reference point. Okay, because the trend line, properly drawn trend line, actually is conducted for a series of lows or highs, just being put, aligned with a single straight line. And that is what you call a trend line, to be specific. Okay, and the fact that Bitcoin has recently broken down its trend line, then it kind of like just stands, somewhere around. This was a very important warning from the market. Okay, I did warn everybody of potential chances of visiting $42,000, $41,000, like 41.8, 42, 43K region, coming from the volume weighted average prices, which is definitely and perfectly logical and logical logical from the technical point of view, because that's what the volume weighted average prices suggest. Okay, whether this was right or wrong, like, it's of course too early to say, right? Whether the prediction that eventually we would go towards like 42, 43, I'll give it a couple of weeks, because in my opinion, all the bullish conditions that I have talked recently and about in my free reports or in the webinars, in the live streams, interviews, and so on and so forth, have been met. All the bullish conditions for bulls to continue, okay, have been pretty much checked and crossed out of the list. Okay, and yet Bitcoin is currently, just again on the intraday local basis, is literally just trying to break through the previous highs. Okay, so it kind of like, this case was postponed. It's not right or wrong, question, because making money in trading is way more important than being right or wrong. Okay, you can be wrong and win money, and you can be right and lose money right immediately. So it's pretty much irrelevant. But the fact, or should I say the fact, that the reason that the big market warning came in was this very breakdown. Okay, this very trend line breakdown, because when the trend breaks down its trend line, its virtual support, and then it means it becomes irrelevant, that this trend is not sustainable anymore, and that we have to search for a new trend, okay, perhaps of a different angle. And just like it happened in here, we saw some sort of like a local pullback, and now retest into the lower territory, and just attempt to break through higher, okay, which was so far successful on all time frames. But to be able to call it fully perfectly successful, we have to close today. We have to close this Friday's session, okay, over these very highs. I hope that it makes sense so far, everybody. Okay, I hope that it makes sense, because that is what constitutes and creates the technical just validity for confirmation. Okay, if a daily close, if the daily candle closes through or over certain level, certain region, this is what validates that the entire session has, in summary, been bullish if it closed through to the upside, or bearish if it closed through to the downside. So again, this market warning is, I wouldn't say perfectly invalidated, but it has been postponed to some extent. But the market warning, first of all, it does not mean, it does not really cause, it doesn't really have any causation. What it does have, and what it does suggest, that it does suggest to you to, for example, take profits. And guess what? Nobody has ever broken, pretty much just their portfolio down because of taking profits. Nobody's ever got broke for taking profits. Okay. And when the market, it was not me to print this signal, it was the market. Okay. If the market tells you that the trend line is broken, this can be read as the sort of like a, not the red light already, but like this orange light. Okay. When you're driving super fast through the street and there is green light, and all of a sudden when you're just about to cross, just do the crossover, and that you see the green light turns into an orange, right? This is it, right? With this difference that, of course, we are not really saying the market stop just yet. Okay, we have been warned. What it means is that if you are warned by the market, then it means you have to appreciate the risk. You have to, I should say, not underestimate the risk, because the market informs you that the risk significantly has improved, has boosted against your chances. So what do you do as a wise and experienced trader, okay, against what majority of traders do, is that you secure at least part of your profits. Okay, because guess what? Unrealized profit is no profit. I know people who run their accounts, who run their accounts from hundreds of dollars to tens of millions, and watching, they later watched it just go back to the same levels because they never realized the profits. Okay, so if you take trading seriously, you have to respect the market warnings. That is a very simple case. Okay, so which is exactly what I did suggest, to take some profits and offload at least some part of the unrealized profit and turn to a realized profit and actually celebrate the fucking victory. Okay, because that is what it is. And not many people, think about it this way because they fear of missing out. They follow the FOMO. Okay, they fear that when they leave the position, it would keep pumping. And guess what? When you're not experienced, when you're just new in the market, you think, okay, the market is pumping it without me, I better jump in back, right? So when you do this way, pretty much when you do this, what happens is usually that you keep repeating that a couple of times until you finally and eventually buy the very peak, right? And then when you buy the very peak, you are resistant to close your position because you are pretty much like not even the risk averse, but you don't want to admit your failure, right? So you're saying, okay, the market is going to bring back the levels, I'm going to get out. But guess what? The market never brings back the same level back again, because you have just entered 10x or 100x position after a silver pump, right? So congratulations, you've just bought the very peak. So that is what it usually happens. Okay, so because of that, you have to take the market warnings very seriously. Okay, and taking profits doesn't cost you anything other than giving you winners, that giving you victories and success. Okay, so knowing of that, again, we have locally, if we actually just move to another chart, okay, we have locally seen an extremely important, I should say, series of pattern breakouts. Okay, so here is an example of symmetrical triangle. Okay, it's rather not the most, I should say, complex form of a triangle I've ever seen, because it usually has sort of like, not the for like 1, 2, 3, 4 touches, right? It usually has like somewhere between 5 and 6. 3 and 5, it's irrelevant because the pattern consisting of two conjuncting trend lines in the like from the opposite directions, that is what you call a symmetrical triangle most usually. Okay. Aside from the pennants and like aside from the pennants or wedges. One way or another, we have seen, just like marketing here, we have seen very significant and major breakout. Okay, this tells you that the market really signals to you that, okay, after some series of of uncertainty like periods, some uncertainty sessions, the market has pretty much like not confirmed that yet because we are heading into the weekend and the daily candle is not closed just yet. But we have seen the relatively bullish price action throughout the day, and the fact that we are still holding and trading over $50,000, which we have kept rejecting before, tells me that okay, the market is slowly starting to to get convinced that trading over $50,000 is something you can get used to, right? If you were bearish, put it all the way up, you try to short it, okay? And the shorts just add to the liquidity for the powerful breakouts. So what happens again in here is that you saw this very significant breakout, okay, of a symmetrical triangle, and this alone is combined. If you actually have a look, these are the Bollinger Bands. Okay, the Bollinger Bands are, this is a volatility indicator, okay, because, well, here you can only see the upper and the lower band because I kind of like muted the main median, the mean, the 2020 period moving average as the main reference point. But what it does is if you have that MA20, so what it does take the upper band and the lower band to actually come up as a result of the standard deviations of over a certain period measured. Okay, so what it does give two standard deviations in the upwards direction and two standard deviations to the downwards. Okay, and per the standard deviation, this is a statistical term, okay, which pretty much just informs you when I have a set of data, okay, which pretty much just informs you like if you have an average, then how much every single point, okay, like this arrow or this, right, or this or this just stands out, how much it stands out on average against its mean. That's what the standard deviation, as a matter of fact, kind of like just signals, tells you in practice, okay? So this standard deviation, two standard deviation on top and two standard deviation on the bottom, actually statistically covers for 95% of time for the price action to happen to be inside the bands. That is the statistical nature of the time series that the price action is. Okay, so you do not argue the statistics in here because that's how the math works. And again, knowing of that, you have to approve that each and every single major breakout, be it on the downside just here on the right, on the left, right, or just here, the breakout, the short-term candle breakout through either band, if it's a lower band or if it's an or the upper band, defines, and if it's a closed candle, over the levels, over the band, this defines the breakout direction. This defines the volatility breakout. Okay, so we did have the chart pattern breakout, and we did have as well the volatility breakout locally. Okay, and its final confirmation comes with daily close over the previous prior high of 50.5. Okay, when it does this trick, I agree, smash the like button, everybody, appreciate it. When you see the daily close over 50.5, this gets to kind of like give you, again, like the higher the better, of course. If it prints a very significant candle like this, right, just like that, shooting straight to 51, 52, this is a perfect confirmation, just like we saw here, this one, right? This very local candle in here was the final, was the signal right after this one, the very first signal actually for the Bollinger Bands breakout, came in with this very strong close candle that confirmed that the short-term volatility exceeded the average, the standard deviations, okay, which noted and marked the abnormal volatility in the upwards direction, which was the very beginning of this major 70% plus upwards trend. Okay, hope it is clear for you guys. And assuming we see this 51 candle, just $51,000, just candle level breached, on a daily basis, daily or weekly close, even above it, then the next targets are, in my opinion, 53, okay, 55, $58,000. That is very likely, and I can see a lot of traders also align with these levels. So again, unless, like, of course, this burst, as always, after buying into a pump, buying into a 70%, significant pump is always more risky than buying it right at the very beginning. So because of that, the higher you go, the higher up the trend you move, the more significantly and the more seriously you should have, you should have the respect for the warnings from the market. Okay, so if you just, for an example, see some sort of like a fake out all of a sudden, that the candles just go back and hide back inside the pattern, then this somehow negates the pattern of the symmetrical triangle. It either evolves into another pattern, or the pattern is invalidated, just I should say irreversibly, and this accelerates the further sell-off. Okay, and you have to remember, you have to take the protection against the risk of losing, more than 25% or 20%, to the downside of unrealized profit. Okay, because if you trade with $100, that is going to cost you $20, 25. But if you trade with 100 millions, then show me one person, who's willing to give you away just $25 million just like that. Okay. Which is exactly because we have seen a major rally upwards. Okay, you have to take the market signals, the market warnings very significantly and very seriously, because you never know when the dump news comes in. Whenever the Fed just releases some sort of like a footnote that power passes the bill, that cryptocurrency traders are going to jail for trading or something, like whatever. Okay, some unpredicted FUD news event, just like you did see last year, March, COVID 2020 crash. Okay, you never know when it comes, and you should always be ready just in case it comes. Returns, or should I say, trading is not only about the returns, it's also about the risk. Okay, and if you have 10,000% return, but this brings insanely huge risk, then risk adjusted return, with that financial terms used often, is not really working well in your favor. Okay, the huge risk is something that tells it, okay, you have huge chances of losing the money. So the biggest amount of people who trade it, knowing that they can lose money with very high chances, are gamblers. So having this local warning still in the back of your head of Bitcoin having the chances of revisiting, to $42,000, $43,000. Right now, the market is upwards. There's a significant breakout. Okay, but if we see the close of a day, be like over the previous high, or even better, if it closes over $51,000 with beautiful candle, this validates not only the chart pattern breakout, but also the volatility breakout. Okay, and before we continue, I just want to remind that to everybody who's new, okay, on this new on this channel, is watching that as a new person on our YouTube, make sure, guys, you hit the subscribe button. Make sure to smash the likes, just like the beautiful people in the comments said. It helps us grow. It helps us, pretty much just kick right in the nuts for the YouTube algos, because that's how it works. To be able to keep growing your account, you have to actually, just work with the YouTube algos. You have to answer them. And what it helps us push, when continue sharing this valuable content every single day on our YouTube, is so that you hit the subscribe button, turn the notifications on, leave some kind comments if you like it. Okay, and algos will boost our videos as well, and would let us keep it going just the way you want. Okay, So there is a very quick question from one of the exclusive members. I'm going to take it. I don't usually take the questions like in the middle of a show, but because Hamza Malik is our great exclusive member, I'll take it. So 42K is unlikely now. Um, at this very moment, well, it's trading over $50,000. So if you ask me if it's possible that we go there in the next minute, in my opinion, not. Okay, but in general, 42, 43, this should still be somewhere in the back of your head because, again, if in case you see that, in case you see some unpredicted news that you never know when it comes out, when whether Elon Musk just posts a joke on Bitcoin and the market just takes a hit, then the 42, 43 is going to be the next stop as the support, okay, for the volatile, just quick, sharp flash crash, flash correction based on the volume. So 42, 43 is your safe zone, is your place where you want to, like, while enjoying the pump and while letting the market go up in the opposite direction, that is where you want to keep your bits just in case something happens. Okay, I hope I made it clear. And besides everybody, I think that you are aware of my longer term predictions, for Bitcoin, because I do assume that first of all we have to revisit $58,000. In my opinion, this is inevitable, and on top of that, I do believe that based on the historical records, September's have always been slightly negative, right? On average, they've been negative for Bitcoin's history throughout the past years, on average. And this is actually one of the like two or the only month in the entire year that Bitcoin tends to perform worse on average than it usually does for other months. So you have to also account this seasonality effect and add it on top of the warnings that you read from the market. This way, you are able to protect your capital. Okay, so knowing that, again, we are having the chances of revisiting, high 30s or low 40s, because that is also what the moving average would suggest, the 50-week moving average, which saw a beautiful bounce that I was talking about, that nobody believed me, and that it also myself believing in my own predictions and my own knowledge along 29.6 case, okay, on the fear like climax on the 21st of July. And knowing of that, again, I'm ready to see some declines, potential declines after a very serious, very significant rally up, okay, leg up of the upside pullback. Having there, just still somewhere in the back of my head that September's usually do not favor Bitcoin too much. I could be ready. I want to be ready for potential declines, not heavy ones. Perhaps, there might be some lot bigger volatility as well that you see, this high 30s or low 40s, and then the market just pumps back slightly to close slightly below it open, right? Which still turns the month into uh, negative month, like overall. But no matter how we look at it, I do believe that we are heading and slowly getting ready for the final leg up, right? Very simple Elliott wave, just principles suggest that ever since the bull market started, we have had four waves so far. The first one, which kicked off, the second one, which was the reload, kind of like disbelief zone with the overextension on the bottom from the COVID crash. Okay, heavy deviation against its average, same way that you saw the minus capitulation in 2017, 2018, bear market floor actually. And then you had the third wave, the fourth wave, which no matter, if it's already completed or not, because it's truly, going to be perfectly completed only after we breach and break through the 65K all-time highs. Okay, but there are very high chances that we, because of the low volatility, because of the September's decline, because that market usually tends to expand and the most aggressively in November, December period, that altogether combined, I do believe that there are high chances that it would allow us to see some kind of like decent buy the dip opportunity from the medium time frame point of view, and actually like kick off the final like consolidation breakout. I do believe that it has the chances to actually become contracting consolidation, coil, symmetrical triangle, no matter how we call that, in my opinion, because we have not seen the blow off top just yet in May. I do believe that based on the Elliott wave, just I should say theorems, there are very high chances that the fifth wave target is actually somewhere between 90 and 120, $130,000. That is what I'm personally expecting. And what does that mean for altcoins? What does that mean, as a matter of fact, for Ethereum? Okay, so what it means for Ethereum is that I actually, recently answered that as well for Ron on the Crypto Banther. Now we're really good friends, and I enjoy always being just featuring it there. But what we are discussing, is that Bitcoin, is the Ethereum was actually like, just right now is dancing around and it's approaching high speed, its all-time highs already. Somewhere like it's already tapped $4,000 today. Okay. And guess what? Ethereum versus Bitcoin chart, okay, which tells you about the Ethereum strength compared with Bitcoin. It tells you that it's nowhere near its all-time highs. So it's in its all-time highs, area, and it's not even halfway done. It's not even halfway through done on the strength compared with Bitcoin. So what it means is that we still have some potential to grow. Okay, because even if we take the very simple principle of market rotation, then you would know that when the capital entering the market, when the mainstream, the crowds invade certain market, there is very high chance for the market to become overbought very quickly. So the day you see the final volatility, the final blow off top on Bitcoin, and Bitcoin reaching, its 90 to 120, 130, or even higher levels, whatever, right? I don't really have a crystal ball. Listen, if it pumps 200K, I don't fucking mind it, because I'm going to be like super excited and happy already, right? So it's just going to be better than expected. I love it. And if Bitcoin just gives you these levels, if Bitcoin gives you 90 to 120,000, which is compared with current 50s, 3x from current levels, from 40s, from 50s, when you think about it, then because of BTC USD pump, and if Ethereum remains relatively the same strong versus Bitcoin, then what it means that if Bitcoin pumps 2-3x, then Ethereum would follow with that. Okay, then Ethereum would pump 2-3x as well versus dollar, because if it doesn't change its strength against Bitcoin, then guess what? If Bitcoin pumps 2-3x, Ethereum does it as well. All right. So from current levels, from the all-time highs already levels, okay, $4,000. If you take 2-3x from $4,000, what you get is pretty much like just $8,000, $12,000. Okay. And guess what? This is assuming that we remain stable and do not really boost the strength of Ethereum against Bitcoin, right? And here we're talking only about the technicals, of course, because there are some fundamental disruptions to that, like the high transaction fees and extreme network congestion. Hopefully, until it happens, the Ethereum to zero actually just gets to improve the overall, the overall blockchain situation for Ethereum, because it's definitely clogged. It's very much clogged, because of the NFTs as well. Okay, so it's a very I should say unsustainable moment, for Ethereum with regards to the transaction fees. That is for sure. Okay, but again, assuming that these 2-3x on Bitcoin just results in 2-3x on Ethereum as well, and this takes it as an assumption that it remains the same strength. If it just continues being the same strength, same strong against Bitcoin, then you have $12,000 just to start with. And then on top, because the market every single cycle has improved, every single cycle is bigger in terms of the money. We have more and more money coming in, more and more institutionalization. Okay, more and more big whales coming up, because the market barriers actually evaporate, and the SEC and other institutions, they actually just review and approve the cryptocurrencies, be it for the funds or overall for the investments. Okay, so the large money has their way in the market, which they did not have in 2017 and before cycles like 2014-15. Like when there was a market crash from 2014 bear market, started off by in February by the MT-GOX collapse, okay, by the MT-GOX literally leak and hack. Then before that, 2012, 2013, there was a beautiful pump. There was a beautiful rally of Bitcoin starting off $30 floor, I believe. No, it was the previous all-time high of 2011 was $30. Okay, it was 31. Then it actually crashed to, to well, to 1.9998 if I remember correctly. And then it pumped all the way up, 2012 or 2013 towards 1250, $1,250. Then the crash came in 2014. You saw the market disrupted, and a big hack, resulting in further deep, in floor of the bear market bottom for 2014-15 in December. It always is December, by the way. It always is December. The market always peaks for Decembers, which is why exactly I would believe that big major pumps and the final stage of the bull market rally comes in December this year. Okay, but just like I said, $8,000 to $12,000, and if you take and know that Bitcoin, the capital, just is in the market and it is way bigger than it used to be before, then you can expect Ethereum to even perhaps, just like go past the all-time high levels, for Ethereum, for Ethereum Bitcoin chart. Okay, so it gives you, at least in my opinion, I would expect at least retest of this ratio. Okay, so it gives you technically at least 111, just like it says, 111%, 100% upwards, 2x from here, 2x put on top of these 2-3x from Bitcoin. Okay, those are the FUD assumptions. But if Bitcoin goes wild and if there's no global crash, then I can see Ethereum pulling 2-3x from here, which is $8,000 to $12,000, and on top of that, in the final stage of the rally, 2xing even on top of that. So this places you somewhere between 2 times 8 gives you $16,000 floor. 3 times 8 gives you $24,000. Okay, so it is not very stretched over. It is not very far-fetched to expect Ethereum somewhere between $15,000 and $20,000 when it does it. Everybody, I think that I will have already realized about 80% of my entire market exposure in crypto. I will have left with 80% of my profits and probably allocated that already to commodities, real estate, and some stocks for dividends. Okay, but this is wild. This is wild if you think about it. And I tell you what, guys, this Ethereum all-time highs at around $15,000 to $20,000 are really thing that it would come. And again, unless the World War III, just expands and emerges, and you see the entire fucking just world on fire, So unless that happens, in my opinion, it's very likely. Okay. So what about the DeFi? By the way, kind reminder, everybody, put in your questions. Keep it coming, for your questions. Keep it coming for your chart requests. I'm going to pick a couple of questions later in the show, in a couple of minutes, and I'm going to give you some chart requests as well if you're kind for me. Okay, the kindness works to both ways, everybody, and I guarantee to you, your love comes back. Your love comes back whether you go and hack some people, you tell them you love them. Okay, this is going to come back to you with double force. This is going to come back with the full wave of positivity and love flowing into your life. I promise you that. Okay, so just go and do it as your homework. But what about the DeFis? Okay, what about the DeFi? So if we are actually to go and check, the DeFi perpetual futures. DeFi perpetual futures on FTX. Okay, so what it tells you so far, we can actually, because it's an index, we do not really care too much about about the candlesticks. What matters is the overall trends. Okay, and to add to the importance of that, we can actually first of all display the volume weighted average prices anchored at a very floor. Okay, the volume weighted average price is anchored at the very floor of this one as well. Okay, And of the major reversals, you always want to anchor these at the major reversals, mainly because you want to find out what is the fair price according to the volume, okay, anchored like ever since some certain period started. So every major reversal is going to serve you as an anchor, and you can tell that the peak of May, or the peak of May in the DeFi, the very final boost for the rally that started in November 2020. Okay, and the most recent leg up, just like to analyze for Bitcoin, they do tell you pretty much the same level. Okay, pretty much the same level. Importantly, because while these matter or not, this is the DeFi index perpetual future, so it's not really the very concrete asset. It represents as an index some exposure, some weighted exposure of certain DeFi assets in its overall average performance, right? So these one weighted average prices, I do usually prefer to use them and apply on single coins, assets, stocks, and so on. Okay, if we go and use moving averages, very simple moving average analysis. Okay, let's just take a look at 50-day moving average, which is kind of like a medium term, because just like I said, 3 weeks, 3 months, this is a medium time frame. Okay, so 50 days just matches it. Okay, with 200-day moving average. Okay, so let's just see what it looks like. Okay, this is a comparison of medium-term trend and the long-term trend. Okay, so you can tell that the medium-term trend, the average result, the average performance, okay, of DeFi perpetuals is actually boosting and increasing and slowly approaching its 200-day average. Okay, so is that bullish? In my opinion, it is, because it eventually paths its way to the crossover, to the bullish crossover, to the golden cross, if you will. Okay, so with some lag, in my opinion, this gives another bullish golden cross confirmation that, and yet another reason to believe that there is going to be an everything bubble for Bitcoin, for Ethereum, for mainstream altcoins, for DeFi, for NFTs, perhaps for a brand new specific, just new type of a crypto asset that we haven't heard of just yet. I don't know. Security tokens, have been definitely around for some time. And you never know, people come up with ideas very, very fast, and the projects tend to emerge very fast as well when the conditions are good. Okay, so hoping everybody just can take my notes in here. I do believe that it gives another confirmation for why we could expect the DeFi also to join for the legendary pumps, for legendary crypto pumps, okay, that are there to come. And by the way, they usually come with certain lag when you check it. Okay, this is a crypto total cap of altcoins. Okay, versus the Bitcoin. Okay, this is a Bitcoin chart. The orange chart is a Bitcoin chart, and this is the market cap of altcoins. So if you remember, the Bitcoin actually peaked around $65,000, in April. Okay, so have a look, because even if we just take it in here, okay, then you're going to see that there was some time difference between the peaks. Okay, this was the peak in April for the Bitcoin, mid-April, and this was the peak for altcoins in May. So, and actually it was in mid-May. So this distance, or I should say, period, the time period of 1 month is exactly how much lagging usually the altcoins have. Maybe not usually, but how much lag and span, the lag span, the altcoins can have. Okay, so it takes time, because when Bitcoin pumps and when Bitcoin peaks, then it's just like, I repeat, it's like you spill the milk over the water, where the milk is the market cap, is the money in the financial market, and the table is the market itself. So if you spill the milk, so what happens is this milk spreads across the table. It does spread across the table. Okay, so what happens with capital when the market peaks and when the market is saturated with money, the capital spreads across the market. Okay, so when Bitcoin was actually seeing this decline, when the capital was rushing away from Bitcoin and withdrawing and taking out profits, these profits, you could tell that there was a divergent correlation. There was a negative correlation, opposite one. okay, where Bitcoin dumped and altcoins pumped. Okay, so the altcoins did absorb the volatility, did absorb the market cap, the money which was running away from Bitcoin. So it is a clear evidence behind my thesis of a market rotation for between the Bitcoin and altcoins. This is something that is, well, that should be obvious. And because of that, I do expect exactly similar thing to happen in the late stage of quarter four. Okay, because when Bitcoin peaks with its final ultimate rally, then most likely it would mean altcoins underperforming a bit, the dominance increasing as a result, the Bitcoin dominance chart increasing because of dominant being Bitcoin being the main dominator of the space. Okay, when it's virtually pressing for new all-time highs, I promised you that altcoins will not really be so fast to pump as well, to pump in tandem, mainly because the capital chases the more volatile assets because it gives them more opportunity to earn money. Okay, also bigger risks, but that's what nobody cares, sadly. So I do expect similar pattern to appear in quarter four late stage. Okay, and this would apply to DeFi. This would apply to mainstream altcoins, to Ethereum. Okay, it would have, in my opinion, a couple of weeks time of lag. Okay, so we would take a couple of times of legendary alt season, right? Of alt season, which is legendary, which happens once in a market cycle when everything pulls 10x or 100x. Okay, and that is going to be the very final top of the bull market. And after that, we go straight south. Okay, of course, just like a regular market cycles for the bear markets. But I do promise to you that, in my opinion, I do believe that bear market floor, the next bear market floor, is somewhere between $10,000 and $14,000. This would make a lot of sense also because of the 200-week moving average. Okay, so knowing and combining all the information that I just gave to you, okay, for the DeFi, when it just gave you the confirmation, it is yet another confirmation that we want to go higher. The fundamental projects, that are there, the fundamentally valuable projects are heavily discounted. Just take a look, and the EXRD, it's just been going sideways. I don't know if you can tell, right? But it's been going sideways, like for this entire time. And finally enough, I remember myself missing out in 2017 a coin which was called Trig, TRIG. It doesn't exist anymore. I mean, I don't know if they fucking exit scammed or whatever. But the chart looked exactly the same. It was extremely volatile. Okay, it was extremely volatile. We could see a lot of volatility coming, but it was still going completely flat. And what did appear later is that I got stopped out because of too tight stop losses, where I just didn't have my CMT certificates back then for the certified technical analysts. I of course was committing a lot of mistakes, and I was learning. I kept learning upon my mistakes as well, right? Not to make sure I don't repeat the same mistakes over in the future. And I will not repeat the same mistake, right? Because I got stopped out because of the volatility, which was very, very large. And what it did later, it literally pumped, September to November, pumped like 20x. It took a couple of weeks for triggers to pump 20x, and I was just there, just sitting and watching it go. So Radix right now gives me exactly the same vibes. Okay, and quarter four, late stage of quarter four, when everything bubble comes for the DeFi, okay, for the altcoins, for Bitcoin, this makes a lot of sense, right? So there is, of course, another coins, that I gave, in the Business Insider, like I was talking about Firm Network, of course, as my huge 10x 100x pick. For the same reason, Slidner Finance for the same reason. Okay, Radix DLT, which I mentioned right before, Starter, or Synapse Network. These are just some examples. Okay, but I do believe that when everything bubble comes, you would see everything pumping in tandem. Bitcoin, altcoins like the Ethereum, the mainstream altcoins down the list of the coin market cap, NFTs, DeFi, every fucking thing pulling 10x and 100x. And I'm very convinced this is yet to come. So the best part, if you got liquidated, if you just waste your capital on playing high leverage and getting wiped out and liquidated 10 times a day, then I promise you, you're going to left with no money, not a single penny right before the largest crypto pumps in history are to happen. Okay, and let's take a very, very, very quick look before I rush to close your and answer your give your answers. Let's take a very quick look to the gold chart. Okay, it is of course a bull market because both 200 are actually 200-month moving average and 50-month moving average, the black and orange one, okay, are going upwards. So it is a very long-term bullish market. At the same time, the 200-week moving average moves up. Okay, medium term was actually, of course, just beaten down because of Fed's threats, fake empty promises of boosting the interest rates in 2023, which is fucking nonsense. They're not going to do this because it's only one-way ticket. With this amount of money ever printed, this is only inflationary directions that you can see. And apparently, gold and silvers and the commodities are perfect response to the inflationary environment, which is exactly why I do believe that after we pump through and break through and breach this volume shelf, this resistance level over 1900s for gold, this brings significant chances for us to visit new all-time highs and pull 2500s, 3000s, $3,000 per ounce of gold, and even more. Okay, if we go and have a look at silver, which is practically my favorite commodity right now, it's like the monthly chart. The monthly chart, guys, listen to me very carefully. Okay, this is something that may literally change your life. I promise you. Okay, I'm fucking extremely serious. What do you see in the chart? I really wanted to, for God's sake, double check if you can see the chart. Okay, but silver on the monthly chart has just confirmed the largest monster buy signal in 18 fucking years. This is the largest buy signal I have ever seen in my trading career. Like, period. I promise to you. This is the largest buy signal, the largest monster buy signal of long-term bull market confirmation that I have ever seen in my life. I keep loading with Bitcoin profits. I keep loading silver like crazy. And I know it's a good investment. Okay. And you can tell there was a 7-8 year long accumulation period. And I promise to you, it just like Litecoin, it rarely ever pumps. But when it does, it pulls 10x or 5x just like crazy. Okay, like no other commodity. When it rarely ever pumps, but when you are in and you are patient about it, it rewards you with extreme profits. Like that is, do what you want about it. That is something that I felt I want to give you to know. Okay, so final chart for the commodities, which is pretty much showing the entire crypto industry, should I say, the entire commodity industry, and final confirmation for I do believe, we are set to go up for a maximal like bull run that you've not seen before. Okay, first of all, because of economic reasons and inflationary monetary policy that is set to lead to a 2030 agenda and pretty much like disrupt the financial system as we know it, bring the new monetary policy with CBDC and digital currencies in full control and regulation. I promise you, they already say they're already implementing that. Also, the COVID passports, by the way, in my opinion, that's my personal opinion. I can always be wrong. What is insignificant and important from the technical point of view here is that we have managed to break through the 50-month couple of years 50-month moving average for the index, for the Bloomberg commodity index that represents the entire sectors of commodities, the energy sector, okay, the industry metals, the precious metals, the food market, okay, and more. And this flashed the first kind of like a buy signal with the confirmation, okay, like early this year, and actually in 10 years, first time in 10 years, it confirmed, it just gave you this bullish signal. Okay, the last signal happened literally like 8, 10, 9 years ago. So silver is even larger than that. And well, what I can say, it is extremely bullish, right? Perhaps local retracements 10, 5, 15% downwards on average might come, but like this is what stands at the end of the bear market very significantly. Okay, so commodities are set for the next 5 years of a monstrous bull market, for the monster bull market to come. Okay. With all that said, okay, let's take a very quick point. I got 5 minutes left, 4 minutes left. Let's take 2 free questions. Okay. Uh, do you think investing in these NFTs JPEGs has any sense? It did have sense when it was cheap. Is there any way to predict which NFTs will pump, or is it pure game of luck? It is pure irrationality. I do have a couple of NFTs. I know how the market peaks look like, and this is the peak of irrationality, and that's what you're going to see in the next days and weeks. I highly warn you about the risks and potential crash for 95% downwards with NFTs. They will have reborn, get recovered until Q4 ends, in my opinion, for everything bubble to come. But like, if you're investing right now, you have to, like, if it's something that pumped 100x or 1000x, then you have to appreciate the risk of losing 99% of your capital. Simple. Okay. Okay. I can have this one chart request. Let me have a very quick look at FET. Okay. FET. Let's see FET. Okay, let's see. I assume it's USD because it's in concrete, so I have to assume you're referring to USD. Okay, now let's take a look at the, what is it, Coinbase. We don't want to Coinbase. Okay, let's perhaps see the Binance chart, which is longer term. Okay, this is logarithmic chart. So it's actually, what I can tell you right now, it's actually right now right in the resistance. It's tapping into its all-time highs, right? So there are high chances that, well, the altcoins, just like I said, would follow for a major, pump and rally later in the year, with the remaining months to come. But I do believe that long into resistance after an extremely significant rally, which was what, 4x, 4x, from the floor, from the bottom, you've missed out already 400% of gain. So the question is, how much more you want to gain by longing into the resistance? In my opinion, this is not really a good idea. And you have so many more better investment opportunities. Okay, it's bullish overall, but I would expect, because of high volatility, you can tell how choppy it gets. Around its 200, around it's actually, what is it, 200-day moving average, right? The trend is going up, so it is still a bull market, but I do believe that, again, longing into the resistance, into all-time highs, is not really a good idea. Just, in my opinion, wait for this level, for the all-time highs from the high time frame point of view, to be retested, reclaimed, and that is somehow validating the further increases. But I will not be extremely, crazy about it. Will VeChain do $1 before the end of the year? To be honest, I have no idea. Sorry. Okay, YFDI chart. This is going to be good because I actually had the chart played, I think, couple of days. No, actually, no. You know what? I'm going to bring the. I posted the update. Hopefully, you can see the chart in here in my private personal trading channel, the Birb Nest. Yeah, this is YFDI. Okay, so YFDI, in my opinion, is somewhat bullish. It's definitely way more bullish, than most of the altcoins, mainly because it's already crossed through its 50-day moving average. This is 200-day moving average, so it's a very vast space, like 2-3x of potential of going upwards. Okay, is there yet to break through its resistance locally through the range of the sideways, but it's already printed its bullish patterns, its bullish breakthrough, its bullish crossover for the price action over 50-day moving average, which is typical bullish signal. In my opinion, it's a matter of time, because it's barely moved so far. It's a matter of time until it pulls and reverts to the mean, okay, to 2,500, 20, perhaps $3,000. I do believe it's very likely. Okay, and everybody, I think that we are slowly getting to the very end of the stream. And before I say goodbye to you, everybody, I just once again want to suggest and kindly promise that if you hit that subscribe button, smash the likes, leave the kind comments if you enjoyed this. I promise to you that I myself, my team, everybody around the nest is going to be happier about the content we produce, because there's so much daily video updates, daily videos that we throw in on our YouTube channel that, I really, really hope you appreciate it, and it's all free. Okay? We could charge you like hundreds and thousands of dollars, but it's free. I hope you appreciate it. So the only thing I'm asking is just hit the like, smash the subscription as well for yourself, for your own favors, okay? And you're not going to regret it. Nie ma za co, Ewa. Nie ma za co, też dziękuję. Can Litecoin go above $1,000? In my opinion, it can, and everything bubble comes to close later this year or in the early stage of the next year. I do believe that it's very likely we see $1,000 Litecoin or even bigger. Okay. Okay, I do believe that what you guys might appreciate as well is that we have, all of this trading community that exists since 2017, the Birb nest. Okay, I founded it in 2017. There are some kind comments already. Watch your webinar. You rock. Appreciate it. We have amazing, loving, caring community that is very rare in the space. We've been through the bull markets. We've been through the bear markets. We've been through the FOMOs. We've been through the deepest depressions. We've been everywhere. We've been and done that. We've survived, and not only survived, we keep growing 100% on every single year average. Okay, so it is extremely, extremely successful trading community, but not successful because of my, marketing forces or whatever. It's because we are extremely good at what we do. It's teaching people on how to actually break your path, to your financial freedom. Because I do personally believe, and we as the Nest believe and constitute and really state that we believe in a world with financial freedom for everybody and everywhere. That everybody should have access to the financial freedom. We stand opposed to the overall global tendencies where 1% of the richest people actually makes everybody who's poor poorer. Okay, the middle class making them poorer because of the taxes as well and because of the central bank monetary policies. We stand opposed. We want to give you the chance to actually earn your own financial freedom, not doing the thing for you. We're not a fund. But what I can promise is that you're going to get everything you have to learn, every best industry-leading tools, okay, to help you fight for the financial freedom. We won't do the job for you, but we are there to help. We are there to navigate, to help you navigate. We're there to help you save your time, save your money, and instead of spending that, for hundreds of thousands of courses or books which don't really play the role in your life. You can come around and learn about the legacy markets. Watch every single day a new webinar that comes out. We can participate in the search for the gem hunting for the fundamental analysis by the best fundamental analyst I've ever found in my life. Okay, we have extremely unique trading therapy sessions. We have accredited PhD certified trading psychologists. You're not going to find the other community which has 2 accredited trading psychologists next to the to everybody, just being right there for you to reach out every single day in 24/7, okay, for your help, to give you the psychology sessions just like you would go for to pretty much like just psychology, professional. So I want to give you all that. And more with the exclusive resources, with the exclusive news, okay, rec confession, so that you learn what you can, just avoid. Follow my personal updates, just like the ones that I actually revealed and pinpointed at the very bottom on altcoins, on Bitcoin on the very bottom. Everybody there knew before, okay, before the public knew. The market scatter for crypto, the market scatter for legacy markets, for commodities, stocks, indices, forex, every fucking thing you can come up with. Daily Bitcoin reports, okay, the daily, pretty much like 5-7 times a week we post video report, okay, video report for our members. And this is like, listen, this is nuts. 7 days free, okay. We give you 7 days free for everybody to come and try out. If you don't want to become a paid member, we're fine with that. Nobody's going to force you. 7 days free. When you enjoy that, you're actually going to get very good rates. okay, so that you come up as the loyal member and actually join the community, join tens of thousands of people who are in the community. We're one of the largest and longest living community of this kind probably on the world right now. Okay, and not many certified accredited technical professionals, just like I am, just like my other people in the team are, who is inspired to follow the same path. Okay, we are there to inspire each other. We are there to help you build yourself, build your financial freedom and knowledge, and you can get that 7 days free. And you're not going to be charged a single penny for that, I swear, and I promise to you. You have my word. Okay, put in your name, put in your email address, and you're going to get all of the info to your mailbox. To like, it is a very simple process. It is very automated. It takes you a couple of seconds, and you're already enjoying all the content for free that I gave to you with 24/7 support from me and my team. Okay, and to actually give you everybody the final tip, there's going to be a giveaway right now. Okay, right after I finish this show, there is going to be a video played. There is going to be a video played and a poster picture with what you have to do, okay, in order to win 1 month of exclusive Nest Club. 1 month of exclusive Nest Club, which is worth, okay, which is worth, if you go and sign up, for the exclusive Nest Club for a month, it's actually $130. So I offer that to you for free if you take part and win the giveaway. Okay, high chances that if you engage much every single week, I would have the giveaways. So you can try your luck every single week. Okay, and yeah, it's going to be there. The steps are going to be very clear. So make sure, guys, you engage. And if you appreciated that, guys, I really urge you to stay with us for what's coming within the next days, within the next months, with the Birb Nest community, with me, Adrian, with Cryptobirb. Okay, and like this way, you're going to be there every single time I call the bottom, every single time I call the top, every single time I buy new Audi R7 or tons of watches, on the market peaks, just like I did in April and May. Okay, and yeah, 7 days free. If you're in for that, just make sure to actually participate. And everybody, that's all for now. I'm out. God bless. Stay safe.